Hi traders, I hope you're enjoying your weekend. I got slightly sunburned today because the sun was so strong. For the UK, we've got a long weekend. For the rest of Europe and the US, it's a normal week. So, what am I seeing in this market? Well, I'm starting off with this Nikkei on the daily on the right and weekly on the left. Nikkei has struggled. We've got some massive support under here on the weekly lows, and we have huge resistance up here on the high. So we're in a little box. On the weekly, that to me is a stopping bar on the 50 MA. So we've had this huge bullish, massive bullish run up here based on Abenomics. We pulled back to a fib level, ran up, made a new high, and now we're just consolidating. Now typically this kind of pattern is typical of a good bullish consolidation. The market will run up and it will just drift until it touches the 50 MA and potentially come off. But with all this resistance up here, that is a big call. So I'm keeping a very, very keen eye on what this Nikkei is doing, because I am bearish on the market overall. We're seeing US bonds seeing a lot of inflows, and we have seen selling into non-farm payroll, into US jobs. So the 2013 highs you can see up here, depicted by this line up here, we've had a move into them on early April, and here we are early May, coming in, crashing in and selling. The weekly is not quite as bearish as you might have thought. We actually closed higher than last week's close, so we actually engulfed the previous week's bar. So there are some mixed signals, but there are some very worrying concerns with the fact that the safe havens are getting bought, and we'll look at gold in a minute as well. So at the moment, we started off last week with this selling into. We closed at 15,388. We tested the 50 MA on the Monday, very late in the last couple of hours of trading on Monday, and took the rest of the week climbing up to the 2013 highs. So it was I have to say, a lousy week for me in terms of the Dow, because of the way it moved so late on Friday and caught me out, and I got some stop outs on Friday trying to buy support. What I was seeing on Friday was, I saw that the break to the new high, a new weekly high, tried to buy pullbacks into support. Into the open I should have got a move, but they ripped it down too hard and stopped me out, and I took a free trade later in the day. When I say free trade, took a low, stopped to break even, put some points on the account, and then gave them all back as I ramped my stop up and got stopped out. So the Dow really was not good for me last week. I didn't pick up on that massive pullback. So this week, I'm not around on Monday, obviously, because I'm going to enjoy the day with my family, but I will be looking to see where we close on Monday. And certainly any lower, I will just be shorting pullbacks, and I think you might want to look at that as well. I mean, let's just go to the 5-minute chart and look at, if you're a day trader, have a look at what's happening on this 5-minute chart, because this just smacks of high frequency trading, and that's going to be the core subject on Monday Traders Roundtable. So I'm going to do a quick 30-minute Traders Roundtable, even though it is a whole day in the UK. I will come and talk to you during my day off, and we spent 3 days with a real lot of mess here. That was Tuesday. That was that was Wednesday. This was Thursday, and this was Friday. And I bought this box here late session. It moved up. I got about 30 points on the account before I ramped the stop up, and it just rolled over. Okay, but in this kind of pattern, I'm going to go into a lot of detail about how this pattern occurs, what it means, and how you could potentially trade it, because this is becoming very, very frequent in stocks as well. And there's one stock in particular that I think it's happening to, and that is this one here. I think that is. I think Amazon is subject to high frequency trading. I'm going into more detail about what I'm seeing there, how you can spot high frequency trading, and how you can manage your risk around that. Okay, it was very interesting, and I'll go into a lot of detail, so I hope you join me. I will keep it nice and brief as I'm on holiday that day. Right, so you can see I did trade the US dollar yen. I called this in the room. 120 was massive, took it off at 103 and got a huge spike. A weekly bar that is really struggling, so it looks as if we want to come and test that move there, and this is another sign of weakness in the markets. You know, if the yen is going to get repatriated, that means the appetite for risk is diminishing in the market. So what would I do with the US dollar yen? I would leave it, certainly on Monday. If we close under 102, I will look at the risk reward ratio on a short, but to be honest, that's just so sideways. Yeah, I took a trade in a 60-minute chart on the US dollar yen and took it off at the resistance. Had no hesitation taking that off, and so I'm looking for smaller moves at the moment. Let's just go through the charts. So the dollar is still seeing weakness. US dollar Swissy is weak. Now the pound, and has been very, very strong. That to me is a reversal signal. I think we will see a pullback to possibly as far as 160 here. So retracing back to this massive support here, 165.85. And the weekly, however, is still strong, and it's still a decent close up there. I would try and if you want to trade this, you could put an order out for 168.80 area, but your stop's going to have to be above 169.22. Not that big a stop. Otherwise, leave it, see how we perform on Monday. Obviously, with the UK not being around, it may move sideways, but that is new high, close below next day. That is a potential real reversal signal. But with a weekly like that, ideally, I mean, if we could if we could move sideways and see some spikes up to 169, great place to get short with a low risk entry. So I'll see how that goes. And let's move straight on to the pound yen. And again, if the pound yen, a currency that has been so strong, is trending so well, can put a reversal signal in, then that market is, that currency pair is looking as if it's had its time, it's had its run. And again, this to me is a sign that the markets are weak or weakening. The pair I like the most, I'll come on to in just a moment. Let's just look at the Euro US. Horrible chart, really horrible chart. We've slammed into resistance. We're just sitting on top of that box. Data-wise, this week we have Chinese manufacturing on Thursday. UK rates, nobody's expecting any change on that. What else have we got? Let me just double check. I've momentarily forgotten. Hang on. Not much else. After quite a busy week for data last week, we are pretty quiet. So I think all eyes on that Chinese data on Thursday. I hope that doesn't mean we're going to get a sloppy week. The pair I like the most is this. We've got a lot of data coming out on the CAD this week, and it's projected to be positive. And like the US, I think the Canadians had a bad winter, and I think the data could start to turn for the CAD, which would see this coming off. So let me just tidy this up a little bit. We've already broken a huge run up from 134 to 156. Pull back to the 150, and as soon as we hit that fib level at 152.90, we have been selling. Now that at the moment we closed above the daily 50. So in the first part of the week, if we see any moves to the upside, I would look to get short, and I would look to get short. I think the most likely place is just a retest of that high up there, where that parabolic SAR is. But I'll just update you as we go along. So I'm not shorting at the moment because that is a higher close, but I am looking to get short based on that weekly. Because if we run into 152.35 or possibly even a little higher, I would like to get short on the Euro CAD. CAD yen. Now I've just been talking about how the yen could get repatriated, but if that, we'll keep an eye on that, because if we start closing above 93.80, I think that could see a pop. Just because the yen in general has been repatriated doesn't mean to say they're all gonna see a move with the repatriation of the yen. Let me look at some other CAD Swissy. That obviously is a bearish close. I mean, we've run into the parabolic SAR, the resistance levels at 80.70. Closed just on the 80 mark. So again, leave that one. CAD yen we just looked at. Aussie CAD. I think Aussie CAD's a good candidate. That's Aussie Swissy, sorry. Let me go to Aussie CAD. I think Aussie CAD is a good candidate. Look at 3 weeks of selling on that. So only pull back to 102.20 or higher, 102.40 or more is a potential short area. So again, let's just get these markets open. Let's see where we are on Traders Roundtable and then make a decision. Okay, one I've been following extensively is the pound Aussie dollar. I took 200 points out of this and just walked away. So I've been out of it for over a week and it's done nothing really. Did punch into 183, but you can see the fortunes of the pound do seem to be turning. That looks as if that's rejected the fib level. We could see a retest to 179, at which point if we hold 179 or I'd love it to come even lower, at which point I would buy. So I think there are some good opportunities coming up with the Canadian dollar and with these pound pairs, but I'm short-term bearish on the pound and looking to see if the CAD can actually turn around here. Let's look at gold. This is my concern, that the gold is looking as if that's engulfed 3 days of trading last week, but it's under so much resistance. But I think that could be about to turn. If you look at, it's not the season for gold. That's why I'm a little cautious. A couple of bottoming tails under there. If we close above 13, I think that will open the floodgates. If you buy a pullback to 12.92 and your stop is on the 12.74, it's a relatively tight stop, but just only take that, being fully conscious of the resistance above and how that could roll over. But that close that's a bullish close. And don't forget, moving averages are only guides. They're not the be all and end all. They're just guides. Just imagine them like a rope as you're touring a museum or a stately home or something. or an art gallery. If you live in the US, think of an art gallery with ropes. Stocks. Let's just go on commodities first. Hang on. Actually, I'll do commodities separately. I'll leave commodities until the traders round table. Up with one exception. Let me just show you silver. I actually think silver is a better buy than gold. New low in this pattern, close above. It's just huge support down here for the silver. This is a weekly chart. Huge. And if we start closing above, 20, that's going to fly. I think that could potentially fly. Let's see, repeat of 2010. Okay, so I like silver. The way to trade silver will be to buy a retest of that hammer at 1926 with a stop under Thursday's low. Stocks. FCX has done really well. There's a gap fill up there at 35.22. So let's see how that gap works. You can see the weekly resistance at 35.36. Copper is one of the commodities I'll be looking at because that has done very well last week. Tesla Motors. Now we've got earnings on Wednesday. I'm in this, so I'm going to be very careful as we approach Wednesday to see what I want to do with it. But I'm in profit. I'm going to stay put, and I'll keep tabs of that. The weekly's good. Stopping bar last week, close above 50 EMA, and a higher close than the weekly, so that's good. Netflix, I'm still in, but because I'm concerned about the appetite for risk in this market, I am going to ramp my stop up. I'm not going to give this much room. I'm going to ramp my stop up to 33.80. Why? Because this could potentially just roll over. I've had a huge amount of selling. Pull back to this resistance level, gap down, gap down, gap down, gap down, and here we gap up. This is symptomatic of high frequency trading. So this is why some setups and some chart patterns and candles are not working as they did. So get ready for Monday's Traders Round Table. We'll talk about this. We have closed above just narrowly at about the 50%, but I think if that breaks that low, I think that could revert to the downtrend. So I mean, I'd love it to close higher, obviously, because I'm long, but I'm just being very cautious about the trades I've got at the moment. What else have I got? Diamond Offshore ran up into resistance and is selling off. Would I short that? No. What I would do is certainly a heck of a lot of resistance. I could get quite a tight stop on that. If I'm filled at 53.45, my stop is at 54.75. That's a relatively close stop. Well, that's quite a reversal bar in a weekly chart there. I think that could at least come back and retest that box at 49. So if the target's 49, what's my risk-reward ratio like? I'm risking risking 125 points. That the risk reward ratio is good. It's just a the risk reward ratio is good, so that is doable. Okay, that's what I'm going to look at the moment. So I will hope you join me at 7 p.m. British Summer Time, 2 p.m. Eastern Time on Monday. Otherwise, there's no room tomorrow because it's my day off. Otherwise, I look forward to seeing you in the next video. Bye.